Welcome back to the latest edition of LUMA's Market Report. I'm Conor McKenna, partner at LUMA. So look, there is a ton we could say about 2023. As we all know, it was a very challenging year for deal activity and capital markets in general. So instead, we're just not going to talk about it. Instead, we're going to focus on 2024 and some of the things that we're very excited about going into this year and why there's so much strong momentum across the board heading into 2024. As a reminder, please remember to go to our website, lumapartners.com, to download their full market report. Now, this has all of the data on 2023, all of the things that happen in ad tech, MarTech, and digital content across M&A, financings, and capital markets. Let's get into it. Before we jump into ad tech and MarTech, it's worth first addressing the macro picture. At no point in the last 2 years, since inflation and interest rates rising started impacting technology valuations, has there been as much confidence that we'll actually achieve a soft landing. Over just the last few months, you've seen the stock markets, especially on the technology side, start to do even better than they had been throughout 23, and the Fed starting to indicate potentials for actually lowering rates in 24. This has massive consequences on valuations, particularly for technology-driven businesses, and will be an important driver of M&A and public market activity into 24. So this is definitely something we're paying attention to. But we really want to focus more time on what is going to be happening in the ad tech and MarTech sectors specifically. We're finally here. 2024 is the year when cookie deprecation is actually going to occur. After 3 years of endless panel discussions, blog posts, predictions, wavering whether cookies will or will not go away, we finally seem to be here. This week in January, 1% of Chrome users are going to have their cookies deprecated. People can start to test on them. And by the second half of the year, that's going to shift towards 100% of all Chrome users will have their cookies going away. What does this mean? Well, it's incredibly consequential for the 40 billion plus ad spend that happens in the open web programmatic supply chain in the US today. What we're looking at is two key things. The first is ad spend. First, budgets tend not to shift. If you look at Brian Weizer's research going back 70 plus years, he's shown that ad spend overall is pretty stable as a percentage of GDP. What shifts is where is that spend going, which channels? Well, the big question this year is, can that sustain and maintain on the open web, or is that spend going to shift to other channels, whether it's walled gardens or non-digital channels? The other key thing we're watching is which methodologies take hold. There's been a ton of innovation over the last 3 years of how to approach a cookieless future, whether it's leveraging contextual signals, alternative IDs, more probabilistic capabilities, machine learning, AI. There's a whole bunch of capabilities and innovation that has occurred. The challenge has been getting spend to shift to those while cookies still existed. Well, we're now finally at that year, and that means big opportunities to really assess where the leaders are, where spend wants to migrate to, and who is driving actual performance. What that means for us is often lots of focus on where are those early signals and opportunities to consolidate and grow, which often drives M&A. It's very hard to get M&A done before the catalyst actually occurs, but once it happens, similar to GDPR 5+ years ago, we've often seen a big drive towards M&A into what's working. And so that's something we'll be very heavily focused on in 2024. Now, we have focused on the sector for over a decade and done a ton of deals across the space. And for 24, the one thing that we think is going to finally start to take hold is the opening up of performance and mid-market advertising. Now, this has started before, but we think 24 is the year where it really starts to manifest. And that's because these companies are needing to start to make profits and are going to need to lean on advertising in order to do so. Over the last few years, you had the streaming wars start up. Nearly every major TV and production company launched their own app and subscription service. In the last year and a half, they've all shifted from just subscription to advertising as well, as they found they were losing subscribers and needed to start to monetize in new ways. But even still, they're not breaking through to profitability in their streaming businesses. They're still relying on their old, steady sales approach to driving advertising from mostly the largest 200 advertisers in the country. What they need to do to go to the next level is way open up that aperture and start bringing in advertisers from everywhere. And that means they need to show them performance and they need to rely more and more on software in order to do so. Well, while there's been this push and undercurrent for the last few years, as these companies continue to get pressure to show profitability in their businesses, we think 24 is going to be that tipping point where they start to open up, lean on performance, lean on software, and really move into performance in mid-market in a big way. Now, commerce media is a bit more of a nuanced story. This has been the golden child of ad tech for the last 2+ years, as you've had retailers, platforms, agencies, consultants, and technology companies all jump into this space to get their share of the pie. And it's no wonder why. It's an incredibly exciting space with a ton of ad spend flowing through it, as it brings closed loop attribution and could be a huge player in the programmatic ecosystem, bringing robust first-party data. But like any hype cycle, this has also drawn a ton of attention and been built up in many different disparate parts. And so while in 24 we don't think there's going to be a decline in commerce media by any means, we do believe this is going to be a year where there's a lot of focus on rationalization and practicality. Specifically, there's going to be a continuation of drive towards more standardization in this space. Right now, there is a wide variety of ways to execute transactions, measure those transactions. The workflows are all over the place, and it is getting very hard for brands to manage. Additionally, we think there's going to be more reliance on tech capabilities to bring this ecosystem together. In the hype around this, you've had tons of platforms set up media properties and new media businesses, all thinking they're the next Amazon and bringing their own unique capabilities and unique way of doing things to the market. Now, that's great to leverage the uniqueness, and I think that's going to continue with the data. But it turns out that most of these platforms aren't large enough to attract brands to come and log into their own capability and their completely own workflow. Instead, this is going to be a year where retailers and marketplaces start figuring out how important is media inside their organization, because inherently, retail decisions and media decisions can sometimes be at odds. So this year, there's going to be continued focus on that. You'll see some actually pull back investment from their team and their own tech, but instead lean in, leveraging the tools that are available in the marketplace. Ultimately, we believe this is actually going to be a benefit to commerce media, both in 2024 and in the long term. Moving on to MarTech. So the key thing we're focused on for MarTech in 24 is consolidation. Now, I know consolidation is a dangerous word in the MarTech ecosystem. If you look at the Scott Brinker's MarTech maps, you see that every single year there are more and more companies entering the space. We don't actually think that there's going to be a shrinking number of companies, but rather we think there's going to be an increased emphasis on M&A and inorganic growth in this space. Look, a banker calling for more M&A is no great shock, but let me explain why. Over the last 10 to 15 years, as the MarTech ecosystem has grown, most of this has happened via organic growth, where companies have raised capital, invested in teams, built out products, built new capabilities, expanded geographies, all internally. In the meantime, they've left M&A to the digital giants like Salesforce, Oracle, and Adobe, who've all used M&A as a major tool in their toolkit. But that was in a very different era. We were in an era of growth at all costs, zero interest rates, and plentiful private capital and public capital to invest into their organic growth. We're now in a different phase. We're in an era of efficient growth, where these companies need to be balancing their growth with their profitability. All of a sudden, this changes how they can think about building for the next set of capabilities and continuing their growth. Their organic growth rates are slowing down as they can no longer invest as much off their P&L, and instead they need to start thinking how they can invest off their balance sheets, the cash they have on hand, and the valuable equity they have in order to expand capabilities, products, geographies, verticals, etc. At the same time, you've got the private companies, the smaller businesses that are in the Series A, B, or C range that are now having much tighter private capital financing needs. And those companies that either have slowing growth or don't have the profitability to attract that capital today are going to have to start to find a home. This creates a perfect scenario for those companies that have largely focused on organic growth start thinking about how they can use inorganic growth to move into all these new spaces. And it's a perfect recipe that started in 23 as we had a number of companies do their first scaled exit ever. You had Sprout Social acquire Tiger Media, Content Square acquiring Heap, and HubSpot acquiring Clearbit, all in the last 6 to 7 months. So this trend is something that's already getting kicked off, but we think will really accelerate into 2024. Two other things we're looking at in MarTech this year are messaging and AI utilization. On the messaging side, we're specifically thinking about how consumers are interacting with brands more and more through messaging platforms and how it fits into this evolution of marketing automation as brands continue to put consumers at the center of their marketing strategies and make personalizations across the entire consumer lifecycle and consumer experience. Now, while a lot of that has evolved over time, most of it's been geared towards O&O channels where brands are personalizing the website, their email, their SMS messaging. But at the same time, we're seeing consumers starting to interact with brands more and more on third-party platforms like Meta or TikTok, and not just interacting with their posts, but interacting with them via chat. This is becoming a very interesting sector, not just as consumers are moving there, but even as you see platforms like Meta pushing more and more into this. Meta has noted that business-to-consumer messaging is going to be the fourth pillar of their business, and they're coming out with new features in WhatsApp, opening up APIs in Instagrams, and increasingly pushing more and more people in this direction, even with things like click-to-messenger ads. Now, as we see it, this third-party messaging is essentially becoming this bridge between what were two sides of the marketing world, where you had one-to-many messages occurring on third-party platforms like advertising or social posting, and one-to-one messaging on O&O platforms like email, SMS, and website. All of a sudden, this chat marketing becomes one-to-one communications that's actually occurring on these third-party platforms and becoming a perfect bridge between them, meeting consumers where they are and really unifying these two sides of the marketing ecosystem. It's very early in this evolution, but something we're paying a lot of attention to heading into this year. The other area we're thinking about is AI and how it's going to impact the creation of MarTech companies in this ecosystem. Now, at the start of this, we talked about consolidation in MarTech. This is actually the complete opposite, which is where there could be massive amounts of expansion in this space. As many people have talked about with AI, it's not just impacting things like creative, but it's also impacting how software is being built. As people are starting to leverage co-pilots to do what they used to need 7 to 10 people to do, now they can achieve building products with 1 to 2. And as we've seen in MarTech, this is an area that's got explosive growth in the number of products, features, and companies that can be created as people focus on niche problems. And as this AI continues to develop, we expect there to be an explosion of applications and companies being formed with much less people in the space. Now, this is going to have important implications on company formation, how financing works, frankly, how M&A works, and it's very, very early innings, but something that we think will start to really begin to take hold, and we'll start to see what this feature will have in 24 as the applications around AI and people leveraging Copilot and other tools really start to take off. Clearly, there is a lot expected to happen in 2024. It is an absolutely critical year in the ad tech ecosystem as the data landscape is completely changing with the loss of cookies, and we're going to start to see where things are really shaking out. In the MarTech ecosystem, there is a shift in mindset going on, and we're going to see how this unfolds as companies think about consolidation, look at new channels, and start to leverage AI in more and more ways. Remember, we'll be back next quarter to see how these trends are shaping up, and definitely remember to go to our website, lumapartners.com, to download our full market report. As a reminder, this has all of the data on M&A trends, public market trends, and private financings across the ad tech, MarTech, and digital content ecosystems. I'm Conor McKenna, signing off.